Sometimes trading's pretty tough. When the markets are moving quickly, they can really put your head into a spin, and when you factor in the strong emotions that are likely to show up at these times, it's no wonder that traders often end up just tying themselves in knots. So employing a trading strategy that leaves no room for ambiguity is really advantageous. If there's an entry, you can take it or not. You know where your exits are, and you know where you'll take a loss, whether or not you're wrong. And although there's going to be times when you can sense that a trade is not absolutely perfect, there are some really strong arguments for mechanically defining your entries, your targets, and your stops. And here's 4 of them. Clarity of trading opportunities. Knowing exactly what a trade looks like and where your ETSs are, your entries, your targets, your stops, it's a huge advantage. Trying to figure out these details as the markets are moving and often with very little time to act, it's possible, but at the same time, it can also be tricky. So if you have a concrete way of identifying key prices, you can focus your attention on figuring out what the market's actually trying to do and decide on whether or not you take an entry. So by removing a decision step each time you trade, the confusion lifts and a clearer picture of the market can really emerge. Replication of successful actions. By knowing what your ETSs are before taking your trade, you're able to improve your ability to replicate performance over time. And although conditions are not always going to be the same, having an execution system gives you solace when your exit price gets missed by a few prices or even if it runs straight through your targets. Without a system, you can always blame yourself for making the wrong call. But with the system, you know that these things can always happen, but it's okay nevertheless. Trading performance improvements. So without knowing what you're trying to achieve, trades can become a little bit random. So even if you're keeping a really good trading journal, it's hard to figure out what and why something is or isn't working. Knowing exactly the types of trades that you take gives you a far better chance of identifying key performance details and incrementally improve your trading results. Not only that, but if you're manually trading, you can very clearly define what a trading error looks like. And remember, trading errors account for a large part of why traders are unable to maintain consistent profitability. Trading system automation. Look, some people love automation and some people just hate it. But if you're able to mechanically define a trade and add conditions to taking a trade, it becomes possible to automate a strategy if you choose to. And although there are weaknesses to automation, it can make up for them by trading a robust system in multiple markets. Plus the fact that even if you want to trade manually, automation allows for trading rules and inputs to be back-tested far more efficiently. Now the NetPicks trading systems, they fit this bill. There's a reason why our trading systems are not only profitable, but they're popular. And that's because the previous 4 things that we just talked about are all wrapped up into each system. When you're looking for clarity in terms of a trade opportunity, nothing is more clear than having the setup plotted right on the chart. And what's behind the setup, it's all explained in the training, but you can see how clear the entries are for the trade. The only decision you have to make is whether or not you want to put your entries above or below any key areas that may cause price to stall. You want to replicate your trading decisions. And at the spot mark B, for example, it shows how easy it is to replicate the important parts of your trading, your entries, your exits, and your stops. Now, Counterpunch Trader also adds add-on trades plus trailing stops, and they're clearly marked on the chart as well. And knowing these will allow you to journal these trades and your stop management to see if they are adding or subtracting from your equity curve. Now, automation can also be done through the Trade Assist feature. At C here, all the vital information for the trades plotted in the information window. So it's not a black box trading system. And this is going to allow you to automate aspects of the trading plan. Removing human input and error from trading is often a positive step. So defining many aspects of your trading, it's not a difficult process, although it can be at times really difficult to follow the rules. But following the trading rules of your positive expectancy system is something that must be done. And to fail at that, you're pretty much guaranteed to fail at trading overall. Can you pick the best options trade out of over 3,000 stocks? You'd have better luck finding the proverbial needle in a haystack. It's a frustrating and time-consuming job with no guarantee that you've picked the right product to risk your money on. Well, we've done the work, and we want to give you our hot list of stocks and ETFs that have passed our tough standards for volatility, liquidity, and diversification. This is the exact list that we use on a daily basis. It's not uncommon for a successful options trade gain between 50% to 150%. Simply enter your email address and we'll send it to you right away.